supporting the US government. It's like great. China's no longer buying. In fact, they're selling, and so someone's got to displace it. And it turns out if Bitcoin goes from 100,000 to a million, that means Tether is going to increase because it's the other side of the book. Tether is the gateway to our crypto ecosystem. Everything's traded against it. The major markets on Binance and DeFi. So you work that out, and it works out that Tether can displace China on the short-dated T-bills. So now you get a situation where the US government's dependent on the growth of Bitcoin to remain, solid.
Yeah.
It's ironic.
From volatile trading swings to potentially underpinning U.S. treasuries, Bitcoin's journey shows why it remains the most watched and misunderstood asset on the planet. Bitcoin is once again at the center of global financial conversations, with analysts projecting a 5% price increase that could lift it to nearly $115,519.33 by tomorrow. The move highlights the asset's persistent momentum despite ongoing debates about its long-term role in the financial system. On-chain analyst Willy Woo underscores that while short-term tactical strategies such as buying dips and capturing mean reversion can deliver market-neutral returns, Bitcoin's true strength is found in long-term positioning. Historically, simply holding through market turbulence has outperformed active trading. At the same time, Wu is helping shape the ecosystem's future through infrastructure projects, including institutional funds designed to generate yield in both US dollars and Bitcoin, as well as a forthcoming Bitcoin credit fund that emphasizes borrower self-custody of collateral. More intriguingly, Wu suggests that Bitcoin's expansion, alongside Tether's growth, could eventually make the US government indirectly reliant on crypto, as Tether takes on a role once filled by China in purchasing short-term treasuries. Yet even with this bullish backdrop, Bitcoin's defining challenge persists. Its volatility remains nearly 10 times higher than that of major fiat currencies. This instability continues to limit its adoption as a reliable currency or portfolio hedge, leaving investors to weigh both its promise and its risks. We're only at the beginning of crypto's story. The biggest chapters are still to come. Stay tuned, subscribe, and turn on notifications so you don't miss a move.
Trade very, very short term.
Yeah.
It's almost like market making sort of
Yeah.
stuff. But then I also, it's not quite arbitrage. I sort of like try to buy the dips and mean reverts upwards. It's very short term tactical. It kind of looks like a market neutral yield. The long term stuff is mainly I really want to make sure that I'm in cash. Don't tell the hodlers, but I think the hodlers are onto the right thing is to hold. But I've always done best when I move to cash and just sit out the mayhem. And maybe I'm wrong, maybe I'm wrong. Maybe I'm it's wishful thinking that we're going to be a market and it goes up forever, Laura. Um, but like that, I'm looking forward to a bearish market also. And it's usually the long-term trades that are the best. Like you call them investments, I'd say, moving out, moving back in.
Yeah.
And I'm a builder. I'm building stuff. Most people don't know what I'm building, but I am building stuff.
Can you tell us?
And in the bear market, um,
You hit it.
you're,
You heard it
well,
here first.
well, we've already built the Crest line of products, which is three institutional funds that get you yield on US dollars, one which gets you yield on Bitcoin, one that's institutionally sort of hardened to work with a Swiss private bank for their investors. So this is like, you could think of it as like, all these earn products, but this is how it's actually done. They would give the money to a whole bunch of traders and try and trade it. Like there's a whole institutional thing about it, and it's a fund of funds. So that's been the last 3.5 years, and that's my learning in TradeFi. And now I'm moving into building, let's call it a credit fund. So basically tapping TradeFi and grab capital, um, fiat capital, and giving it to Bitcoiners, like lending it out to Bitcoiners who want to use their Bitcoins and doing it in such a way where they have a private key on their collateral so they know it's not no hanky panky, it's not being moved around, it's not being rehypothecated. So I want to get a profitable business that's working to make use of this Bitcoin and have Bitcoin self-custodied, because this is the type of lending we'll do, and I want to promote self-custody. So that's what's lighting me up right now. haven't announced the product. Supporting the US government, it's like great, like China's no longer buying, in fact, they're selling. And so someone's got to displace it. And it turns out if Bitcoin goes from 100,000 to a million, that means Tether is going to increase because it's the other side of the book. Tether is the gateway to our crypto ecosystem. Everything's traded against it, in the major markets on Binance and DeFi. So, you work that out, and it works out that Tether can displace China on the short dated T-bills. So now you get a situation where the US government's dependent on the growth of Bitcoin to remain, solid.
Yeah.
It's ironic.
Bitcoin is once again proving it's the market's ultimate barometer, surging past $115,000 just as traders brace for a potential Fed rate cut that could redefine the next phase of global liquidity. Bitcoin is once again capturing attention as it pushes above the $115,000 level, following a modest surge fueled by rising expectations that the U.S. Federal Reserve could cut interest rates at its upcoming meeting. Markets are interpreting this potential policy shift as a sign of fresh liquidity, which has historically acted as a tailwind for risk assets, including crypto. On-chain analyst Willy Woo notes that global liquidity cycles often play a critical role in Bitcoin's behavior, frequently overlapping with its 4-year halving cycle and even election-driven policies. Since its inception in 2008 during a wave of unprecedented money printing, Bitcoin has yet to face a prolonged business cycle downturn without central bank intervention. This time, however, Wu cautions that structural weakness is emerging, with leading indicators pointing toward fragility. Drawing on Swissblock's research, he highlights that Bitcoin is the most sensitive global asset to liquidity, more than gold or equities, making it a canary in the coal mine for macro markets. Investors now watch closely as Bitcoin approaches a make-or-break phase. Let's get back to the video.
Yeah, and for sure that is going to bolster confidence that currency's being debased and a lot of liquidity, new money is injected in the system, cheap money, and generally that lifts things in a liquidity cycle. Turns out the liquidity cycle is 4 years. It's superimposed to Bitcoin cycles, superimposed onto the halvening.
And the
Bitcoin
election
was created.
cycle. And the US
Yes, and I
election
do.
cycle exactly the
And
same.
the
It's
election
crazy. Yeah.
cycle, and I suspect it is soft influence from the election cycle that is soft influencing the Fed, even though it's meant to be firewalled. That is creating this sort of Fed policy of a 4-year cycle of liquidity. That's just a theory I have, no proof. But the thing was, Bitcoin was invented effectively published in 2008 after the world financial crisis when the Fed was injecting massive amounts of liquidity to soften this crash, right? And Bitcoin has really never had a really full-on test of a business cycle downturn. We've had liquidity cycles of 4 years, but have we had a full-on business cycle downturn? COVID, you could say maybe. Those economic indicators showed that. But the Fed printed early, even before the COVID price affected crash in the market. So in that case, I think it was staved off because a massive amount of liquidity, I mean, what is it, 20, 30, 35% debasement? There was some ridiculous amount of money that was unprecedented that was injected, and we had the run up from the last cycle. This time we have a business cycle downturn, we expect, and leading indicators are showing that. And the Fed should be injecting capital. And that also happened in 2008, world financial crisis. They were injecting capital in the system. The markets were crashing. That was their job, to buffer that crash, because the directive of the Fed is to maximum employment. So it's not always the case that lower interest rates create market go up. And so the question to ask is this leading or lagging? Yeah, it's a weird one this time. I think we're all a little bit confused, and well, let's wait and see. But I'm just looking at Bitcoin, and it's structurally starting to look weaker and weaker into this bull market. And I work with Swissblock. They've been running the numbers for over a decade on Bitcoin and measuring it and altcoins, and their data shows that Bitcoin is leading liquidity. In fact, it is the most sensitive asset, global asset, global macro asset, gold, stocks, whatever, real estate. It's the most sensitive to liquidity, and so you could call it the canary in the coal mine. And yeah, by the way, Swissblock is the people that bought you Glassnode and the on-chain metrics because they were trading this in 2006, so 2016. So it was very early, this data. So anyway, let's wait and see. But the underlying investor fundamentals is currently sort of in a make or break zone, and it's repeating the last patterns of the top. We did have, a high, and we can have this paper run up, but let's just watch it. It could recover, if investors really come in the next 3 weeks. But it's, a little bit weak on my side. I think we've had a run to 120. How high will it go from here?
Yeah,
140, 160. I don't know. Cycle certainly happened 27. It happened all the time. I'm not sure about the cycle. It looks pretty flat. The amount of capital that needs to move Bitcoin at 120 is quite different, than last cycle where it was 10,000, and then became 20,000. So it's significant. And then you got these whales selling into it recently, and every Bitcoin they sell, it's 120,000. They has to buy each one of them before we're good,
Bitcoin's journey since its 2009 launch has reshaped global finance, growing into a trillion-dollar asset class that still sparks debate. Its recent climb above $115,000 underscores optimism tied to monetary policy shifts, yet volatility remains the defining challenge for broader adoption. Despite rapid institutional interest and increasing regulatory oversight, uncertainty lingers over whether it can transition from a speculative asset into a stabilizing force in financial markets. Its unmatched sensitivity to liquidity positions it as a signal for global economic shifts, a role few other assets can claim. The next phase will determine if Bitcoin secures permanence or stays speculative. Will Bitcoin evolve into a cornerstone of global finance, or remain trapped as a volatile speculative asset? Early movers always win in crypto. The biggest opportunities come to those who stay ahead of the curve. Subscribe now and turn on notifications to catch every critical shift in Bitcoin, Ethereum, and digital assets.